watching Primetime. I'm Tamanna Namdar.
And I'm Ayush Alabadi. Let's take a look at the headlines first. Reliance Jio delivers operational profit in just 3 months of commercial operations. Also reports industry-leading revenue per user.
Reliance Industries reports a less-than-expected rise in profit. Gross refining margin hits $12 a barrel, the highest level in 9 years.
And the rally continues on Dalal Street. Nifty surges to a record high above the 10,160 mark.
It's a mixed bag for India's retailers this festive season. Consumer durables see a pickup in sales, while premium apparel sales are headed for a dull Diwali.
And the Supreme Court refuses to relax the ban on the sale of firecrackers in Delhi and NCR till October 31st.
Well, with the top story, index heavyweight Reliance Industries reported less than expected rise in profit in Q2 as the margin on refining oil missed street estimates. Standalone net profit rose 0.84% to 8,265 crore rupees, while revenue rose by 6.7% to 68,532 crore rupees.
Operating income increased 12%, while operating margin expanded nearly 19%. Gross refining margin came in at a 9-year high of $12 a barrel, while petrochemical EBIT margins expanded to 17.7% as it hit a 10-year high.
But the big headline in the Reliance numbers were not really from the oil and gas business. It was rather from its telecom operations at a time when much of the telecom sector is seeking relief from the government. The disruptor in the space, Reliance Jio, has clocked an operational profit of 1,400 crore rupees just 6 months into the commercial launch. In fact, Alok Agarwal, CFO of Reliance Industries, says he expects Jio's growth to continue.
We had revenue of 6,147 crores, EBITDA of 1,443 crores, and EBIT of 260 crores. But these numbers really do not tell the full story. And Jio today represents the world's largest and fastest growing mobile data network. We had nearly 139 million subscribers as on September 30th. We are convinced that we have a strong platform for growth based on upfront investment in network and distribution and unparalleled customer value proposition.
Well, Somit Sarkar joins us now. Somit, well, you've been tracking this performance of Jio in Q2. Average revenue per user of 156.4, that's industry leading, isn't it?
It is. But I'll start with the top line number. Now the net revenue came in at 6,147 crore. Now if you see the industry revenue in the first quarter was around 29,500 crore, and when you match this number with that, the revenue market share comes around 15. The revenue market share for Reliance Jio in second quarter would come around 15 to 20%. This is also ahead of analyst estimate. Now Credit Suisse was expecting Reliance Jio to have a revenue market share of close to 10%, but this number would hold a revenue market share of anything in the range of 15 to 20%. Now EBITDA, they had clocked around 1,443 crore, while the margins were at 23.5. Now this margin number is below the industry standards of around 35 to 40%. But if you see, and on the bottom line, if you see, they had a loss of 270 crore. Now Kotak Securities was expecting Reliance Jio to do a loss of around 2,500 crore, while they have come out with a number of only 270 crore in that fund. Now coming to ARPU, that is a key number, that is average revenue per user. That is what Jio garnered from every customer per month. Now in the second quarter, they garnered around 156 rupees from per user. Now this is highest when compared to other players like Airtel, Vodafone and Idea. Vodafone and Idea had an ARPU of around 141, while Airtel, which is the top player in the industry, had an ARPU of 154. Now what has driven this ARPU? It's the more data consumption that has driven this ARPU. Because if you see the users of Reliance Jio have been consuming 9.6 GB of data per month, while that of Bharti Airtel was around, Bharti Airtel users used to consume around 2.6 GB data, while that of Idea Cellular used to consume around 2.2. Now Bharti Airtel was selling this data at 60 rupees per GB, while Idea Cellular was selling at 54. And when you come to Reliance Jio, they were selling each data for only 16 rupees. So they were selling data at a cheaper price, which led to this revenue growth, which led to this outstanding revenue for them, and obviously obviously on the margin front also they came out with positive numbers.
All right, thanks so much for that, Sumit. Now, to understand how Jio has been able to turn profitable on an operational basis and what this means for the rest of the sector, we have the biggest experts in the telecom space in India on the show for you this evening. We're going to start off with Sandeep Das. He's former MD and CEO of Reliance Jio, who has also been the CEO of both Hutchison SR and Maxis Communications, which runs Aircel. Very good evening, Sandeep. Welcome to Bloomberg Quint. Mahesh Uppal joins us. He's telecom analyst and director, Comfirst India. Prashant Singhal is also joining us, global telecom leader at EY. Mayuresh Joshi of Angel Broking is also on the phone line with us. So we have this panel of experts. But before we go to all of you, I want to welcome Sajid, my colleague, into the studio as well, because he's just come running, in fact, from that Reliance press conference. And before we try and understand from our experts how they did this, what was your conversation with the management, Sajid, on this big turnaround in Reliance Jio?
You know, the big conversation was all about the ARPUs, basically, right? Analysts were expecting ARPUs to be in the region of 120 to 130 to begin with, but they came at an ARPU of 154.4, which is in line or better than some of the existing incumbents, and that's what is driving the top line for them, and that's also the margin. The capitalization figure is a little lower, I guess. They have capitalized only 1.4 lakh crores. The remaining 62,000 is still capital work in progress. So as and when that happens, it gets added to the entire depreciation and amortization, and then you will have much more. The surprising figure was, from the street point of view, is 1100 crores. What they capitalize as depreciation and amortization, which means that on an annualized basis we are looking at roughly around 4,500 crores, which is much lower than what the street was expecting, and the street was expecting losses, and that was something which is very important to note there. Other important thing, if you go to the P&L statement, is the access chart. And this is the IUC. They paid somewhere around 2,100 crores in the quarter at the time when IUC was 14 paisa. Now it has come down to 6. Yeah. So in the second quarter, when it goes to 6, they will have a savings of 1,000 crores or 1,100 odd crores. They're not saying that. They're saying that we'll have more volumes as well coming in. So we don't know what exactly will be the saving, but there is a saving which is coming down, and that savings will percolate down to the P&L, and hopefully in Q2 or Q3 they may turn net positive. So on an EBITDA level, they are already positive of 1,400 crores.
No, which is the point? How did that happen? Which is the big question that we're taking up on top of prime time, and which is why let's go straight across to our expert panel. Sandeep Das, we'll start with you, sir, who you possibly have the most experience to talk to us on this regard. What is Reliance Jio doing absolutely right? What's working for them?
Well, first of all, very quickly, I'm very excited with these results because, I'm emotionally attached, and congratulations to Mukesh Bhai and his team. This has been terrific results. But I think it's a vindication of their core strategy, which is to make sure that a large number of people at the bottom of the pyramid are serviced with their data requirements. There were doubting Thomases who were worried about consumption coming down when prices were imposed in the marketplace. But I think it only shows that if you have the right product, right priced, you will get the returns that you want. $2.50 per subscriber ARPUs are really brilliant, and a 23% plus EBITDA in the first part of your financial results, particularly when you have taken such an aggressive stance to acquire market share, is really very, very promising. And there's more to come, because as you keep growing, the scale of economies and the subscriber base, etc., and the way in which the entire infrastructure at the back has been restructured, the cost to serve is very, very exciting. I don't think we have still seen anything beyond the tip of the iceberg as yet, because in the future you will see much more in terms of content and usage and growth. And to me, this is very, very exciting. I'm not surprised with these results, to tell you the truth. And I think somewhere along the way, Mukesh Bhai himself is very ambitious enough to be expecting much better results than this. But whatever has come out is very, very exciting.
Sandeep, Sajid here. I just want to ask you about the ARPU of 154.4. It is a very good ARPU for that, but the schemes which are currently going on, the 399 scheme, that's the most driving this ARPU. And what we understand from Reliance as well is that one of the most popular scheme is 399 as of now, and that scheme has now been extended by another 3 months because of the Diwali offer which is coming in, along with some coupons which will give them an additional 28 days. So that's if someone is going to recharge the existing 399 scheme, he will go up to January end with almost an entire amount being with a cashback of entire amount. So do you think that it's a sustainable kind of thing? Even though you have clocked the revenues here, you're still subsidizing the entire consumer base of over 100 million subscribers.
Well, a very large part of India is still unserviced when it comes to data demand. We have all seen it. So I am very optimistic about the fact that usage will only grow. We have seen an average of about 9.5 GB per month per user for Reliance at this point of time, which is higher than the industry. But I think going forward, I feel that this number will get very quickly into double digits and will grow. A larger platform and a base of subscribers will use it, and consumption will be very, very high. So, and don't forget that there are layers and layers of content that is still to be layered on top of these services. We are just talking about basic smartphone connectivity. We are talking about internet usage, but we haven't still talked about a number of other services that will be layered on top of this in the future.
All right. I also want to get Rajan Matthews in on the conversation. And of course, Sandeep Das is staying with us. Rajan Matthews, your comment on this big Jio turnaround, because it really raises a question for the rest of the industry, doesn't it? For the incumbents. Jio had come in with a very low cost, large on volume model. It seems to have worked.
Yeah, so clearly we congratulate Jio. It's one of our members, and so Jio's health obviously contributes to the health of the industry. I think the ARPU number is very credible. What we've been saying all along is that if usage can continue to push up the ARPU close to that 200 rupee mark, that's good news for the industry, because it shows that if the industry does things right, as it appears that Jio is doing, there's hope for all of the rest of the major players to start pushing ARPU up into those areas, which certainly improves the financial condition of the industry. So this is really good news both for Jio as well as for the industry in terms of setting those benchmarks and showing that with the right service conditions and offerings, we certainly can expect to see those types of ARPUs coming in for the industry.
Mr. Matthews, do you think that it's going to bring in some pressure for the incumbents, because the consumption of data for Reliance Jio is almost twice or thrice the current players, and that would mean that the incumbents will have to subsidize the data further so that they can push the data across?
So certainly there is pressure on the other competitors, but that pressure has been going on for about a year or so now, from the time that data was being offered for free, certainly on the voice side, and for a period of time on the data side. So clearly the industry has been trying to recoup their losses by ensuring that they start rolling out 4G in a very efficient manner, rolling out VoLTE, and bringing the handset prices down. So I think what Jio has done is set the pace, if you will, and the rest of the competition is very quickly trying to catch up. So again, from an industry perspective, I see this as very good news, both for Jio as well as for the incumbents, as long as they can continue to keep that pace of catching up, if you will. Airtel certainly is doing that. Idea and Voda, obviously, hopefully after the consolidation, will begin to catch up faster. So overall, good news.
Is it good news for the industry or for Jio is really the question, and maybe we should get Mahesh Uppal in on that, because we were sitting earlier with my colleague Somit, and he was telling us some very interesting figures. The usage for Jio subscribers is about 9.6 GB per month. On an average for a player like Airtel, it's 2.6 GB. Jio is charging 16 rupees for 1 GB of data. Airtel is charging, about 59 rupees. It's a different model. So when Rajan Matthews says that it's good for the industry, but the industry, apart from Jio, is doing something very different, isn't it, Mr. Uppal?
I think yes, it is, and but I don't necessarily disagree with Rajan Matthews on this. I think this is good news for industry because, contrary to what the incumbents had been doing till about a year ago, what Jio has done is to actually help develop the data market. I think their cutthroat pricing and their subsidy on handsets, etc., and the large number of free connections that they gave initially, all that has served to develop this market, which was barely less. It was less than a GB per month only about a year ago, and today we are talking about 9 GB for Jio and about 2.5 to 3 for the others. Now, I think what has been demonstrated is that there is a fair amount of appetite for data in this country. The data markets are highly underdeveloped. And recall also that we have over 1 billion people who are still without any kind of data connectivity. We are one of the world's largest data markets, and also one of the largest, we have also one of the, not one of the, in fact, the largest number of unconnected people. So there is a huge amount of, a huge market to play for. And I think what Jio has done is to demonstrate that. And also, we must be a little careful about ARPU numbers, I would say, because ARPU is measuring revenue per subscription, per SIM, not per user. And I think we often get carried away by this per ARPU business. For example, if traditional incumbents had more people with multiple SIMs, their ARPUs would be significantly or would be proportionately lower than a situation where there is, let's say, one SIM per person. And I would imagine, given that most people are using the Jio services as a vanilla data service at a very competitive price, there is not that much incentive to have multiple SIMs. But for the companies which had both voice and data together and were not actively developing the data market, the situation is quite different. Most people have multiple SIMs of incumbents. So I think the ARPU numbers tend to be understated for incumbents and probably are much more easy to interpret for Jio. So be that as it may, I think this is good news for the industry in the sense that given that this is an infrastructure where you're not, it's not goods that we are selling services. So the incremental cost of adding subscribers is much less. So I think once you invest in the infrastructure, you can actually support many more subscribers. And I think once the networks are in place, we will see higher levels of growth, which will actually help not just Jio or the incumbents, but the industry itself.
So, well, you did mention it's good for industry, and of course, all telecom operators are looking at, well, those without data for now and without 4G for now, especially considering, you know, the Jio phone coming out being a smart 4G feature phone, or what Airtel is doing, tying up with companies like Carbon. Do you think bundling of hardware services, hardware with the telecom services is the way forward for the industry?
Well, it probably is, and there is some evidence that it has helped. I wouldn't read too much into bundling, but if we want to bring more people onto data networks, smartphones will have to be cheaper. And whether they are cheaper because you're bundling them or whether they are cheaper because the volumes have gone up and the manufacturers have been able to cut costs or prices, it doesn't matter. So I don't think it's obvious that bundling is a good idea, but that cheaper handset is a very good idea, and that's the direction things are going.
Mr. Das, I want to bring you in here. If you look at the active subscribers as per the TRA regulation, the VLR subscribers, which they call it, it's around 107 million. Do you think that a lot of people are now taking Jio SIMs as a primary SIM, because it's still 25% of your entire subscriber base is still inactive in that sense.
Reliance Jio offers, there would first be a tendency for people to use it on trial. There is no doubt in my mind that even some of the best customers at the high end are using Jio SIMs as data SIMs, and it's a bit of a Trojan horse, because after some time with the mass or critical mass of users becoming Jio users, there will be a stage when the secondary card would become the primary card. But I find a lot of people, this is anecdotal because I am not privy to the entire subscriber base description, but a number of people are actually using Jio as their main card. And why not? Because they're getting such an extreme sense of ability to use unlimited kind of data, and the data is reliable. Geographically, they cover 4G networks a lot better. A little while ago, I'm sorry, I'm digressing a bit. A little while ago, I think Mr. Uppal made a good point, and he said that the issue is that you may have a million, hundreds and millions of subscribers, but if you don't put smartphones in their hands, then you are not talking about data usage. And whether it comes through bundles or it comes through subsidizing of prices, the key part is that Reliance Jio has worked extremely hard, both by creating an Indian manufacturer as well as by putting in bundle schemes, etc., to see that the number of people who actually have smartphones is high, because only then 4G consumption, or in the future consumption on high-speed data networks, would increase. So coming back to your point, attached VLR and HLR is fine, but over a period of time, I think this will be the primary card. We are beginning to see an emergence of very clear primary card holders in Reliance Jio. And this number will only grow as the services being offered are vastly superior to what's available in the marketplace. And unless competition really spends its energy and time, and of course considerable amount of finances to build equivalent infrastructure and offer services that are equivalent, there would be a struggle. But the fact is that, like somebody said, the future was there for us to see, but very few of us saw it. And here is a company that with sheer belief has gone after the data network.
Well, they have. What are the others going to do is also the question. I want to bring in Prashant Singhal into the conversation right now. Thank you so much, Prashant, for joining us this evening on Bloomberg Quint. And we've been talking about trying to understand how Jio has managed to show an operating profit within 6 months. What have they cracked that the others haven't? But on an industry point of view, what do you think are the lessons for the incumbents, or does this change the way the industry is heading?
Yeah, I mean, I think the way the industry is heading, clearly, I think over the last few years, the industry has been looking very carefully at their cost structures. I think we all knew that when telecom grew, there were certain structures which were created, and the industry has been looking at that to try and rationalize some of those structures and rationalize some of those cost elements. I think they've been fairly successful in doing that, and they would continue to focus on that. I think the whole digitization piece, which kind of brings in a lot of productivity and efficiency into the system, as well as transparency, is the other thing that the industry is moving towards, and will continue to do that. So I think the structures and the productivity and the efficiency would be has been and would be the focus of the industry as I see it going forward. And I think the other thing that would be there is to also see other revenue streams that are going to come in, and it's not just the access revenue stream, but also the revenue streams which would come from digitization, which would then help the industry to improve their margins going forward. And this is for all the operators, and not just one of them or two of them, and not just the incumbents or Jio, but it's for the industry as a whole, because the pie is no more the access revenue pie for the industry. The pie is much larger. It is the content, it is the IoT, it is the various other services which could be provided by the telecom operators.
Let me bring in Mayuresh also. Mayuresh, very surprised by the ARPU which was announced by Jio today?
Yes, Sajid, I think our expectations was a lower ARPU, and they have positively surprised on that front. And along with that, if you look at the subscriber additions that Jio has brought under its fold, I think that's a very decent number as well. So as the market size in terms of the feature phone market increases for Reliance Jio as well, I think there is greater chance for the RMS component, which has increased significantly for Jio, go about even higher. And with the kind of capex program that they had entailed, I think a large part of the capex, whether it's be for their core operations of refining or petchem or even Jio, is largely behind them. And the numbers that they have reported, both on the EBIT front as well as the margins that they've reported. So the margins are a little bit disappointing, but my own sense is that there is a reasonable amount of scope for improvement in terms of efficiencies increasing and a greater amount of efficiency being actually brought on the bottom line with the numbers that they're actually exhibited on the EBIT front within the first 6 months of operation. So yes, I think positively surprised by both the ARPUs as well as the EBIT performance from Jio.
I need to ask you one more question, Mayuresh. With 6,000 crores of revenues on an annualized basis, do you see Jio ending the year with roughly around 18 to 20% of revenue market share? And will that be good enough to give it a margin of more than 30% at the end of the year?
So it's really difficult to say whether they'll be able to expand their margins. But yes, if they're able to expand, as I said, the revenue market shares over the next few quarters, my own sense is that you will see a gradual uptick in the margins. And as a large part of their costs start getting recognized on the balance sheet, my own sense is that even the return ratios, which have been subdued because of the fixed assets probably not getting converted into cash generating assets, even that will start happening over the next few quarters. So yes, I think a gradual improvement in margins over the next 3 quarters not ruled out. And the RMS share, as I said, I think there would be significant accretion on that front, considering the base that Reliance is working.
Mayur, just one quick word on how you see the stock tomorrow?
Monday.
On Monday, actually, yeah, on Monday. How do you think the market's going to react?
So again, I think if you look at the core refining performance, it was a tad bit disappointing, but the petchem performance was very, very strong. And my own expectations are that the kind of imports that they're doing on the ethane front, that will be a huge substitute for the more expensive naphtha. So in that sense, the petchem performance should be quite reasonable going ahead. A couple of their projects are getting on stream. In Q3, you'll probably see the refining of gas cracker come on stream. In Q4, you're probably going to see the petcoke gasification come on stream. So even on the core businesses, because a large part of their capex is behind them, the ROE expansion should be evident as a lot of these assets start flowing into the cash flows for the company. And for Jio, as I said, I think all these factors should probably incrementally aid and abet the company in terms of reporting better consolidated numbers. So yes, I think remain positive on the stock. Hope it opens in positive on Monday.
I just want to go to Mr. Rajan Mathew as well. Mr. Mathew, at the beginning of when Jio initially started competition, the incumbents were of the view that it's easy to give them free SIMs and free data, but it's difficult to convert free into paid subscribers. With the kind of results which have come out, do you think that there is a change in business model and now incumbents will have to look at this model very closely?
So very clearly what we saw on the voice side and what is now clearly evident on the data side is that in India, it's a high volume, low margin business. When we talk about EBITDA in this business, I think we really are not, appropriately looking at the margin. I think it's really below the EBITDA line because obviously the bulk of the costs are in spectrum and equipment network. which comes below the EBITDA line. So I think we need to be starting to look at those numbers a lot clearer. But going back to the ARPU number, with the caveats that were mentioned, please remember that a good 65 to 70% of the market still is on feature phones experiencing voice for the most part. So incumbents who are now obviously aggressively pushing to convert those with well-priced handsets will begin to start obviously seeing more of their voice customers moving over to also consume data. So I think, again, that's good news for the overall industry as that trend accelerates, because the worst thing is to have to operate multiple technology networks. So the ability to move quickly to an all 4G network is quite a good trend for the industry. And I think in that sense, it's good in terms of what Jio has pushed to do.
You know, Sandeep, I just wanted to bring you in here. Basically, you know, Mr. Matthew spoke about how incumbents are looking at bringing in the lower strata 2G and 3G customers into the smartphone or into the data network, and we understand that around 250 to 300 million customers are there in there. So the next race between all three would be for who will capture that 300 million 2G, 3G customers and who will convert them from 2G, 3G to 4G and data customers, right?
Correct. There is no question that, let me just hark back to a little statistic. You know, before Jio came in, everybody was aware that, you know, we had a very large young population and a lot of people who were keen on data. And data was the next way to go. Plus, there was a huge political will to digitize India. And we knew that where there were no highways, there were information highways supported by broadband to be installed in the country. In that situation, if you really look at the non-voice revenues in the industry, they were hovering upwards of in and around 20-25%. Now, that was really a verdict of where the industry was actually working with the data demand. Now, here comes somebody, and I think a lot of credit is not given to Reliance Jio for the fact, except for calling them predatory, is the fact that they have really worked very hard on the entire value chain, starting from acquisition to every little bit of that telecom chain of cost to serve. And they really worked very hard to diminish those costs at every stage and digitize it so that the cost to serve was very, very attractive, which gave them the flexibility to do these attractive prices. The second thing that they worked on is that everybody knew that there weren't enough smartphones that were affordable in the marketplace. But here Jio went and actually worked extremely hard to get a valuable, low-cost super smartphone in the marketplace to make sure that people actually got. So that was very, very critical for that change. So I think going forward, it's going to be very, very important to make sure that these super smartphones are available with all and sundry.
All right.
So, you know, so that's really, yeah, sir.
Thank you so much, gentlemen, for joining us in this very special conversation this evening. To Mr. Sandeep Das, Prashant Singhal, Mayuresh Joshi, Mahesh Uppal and Rajan Matthews, who've joined us in on this debate. The question really was that how did Jio make that turnaround? What did they do right that the rest of the industry hasn't? And has the game changed for the rest of the players as well? That's all the time we have on Prime Time this evening, but stay tuned because after this very short break, we're back with Prime Time Debate.